risks is very, very important. So it's not just that you need to know a lot about it or you need to have information about it, but you need to realize the risks that you're getting into, because it's easy to get blinded. It's easy to get excited when all you see is the gain. It's easy to get excited when all you see is the opportunity. Please remember this: knowing what the risk is, that's where the opportunity lies. Hey guys, so in this video, I want to share 4 elements that are very, very important and crucial if you want to invest. And I think they all go hand in hand with each other to help you to become a successful investor. So said when you're investing, you're not competing against other people. That's why it's never about you comparing your gains, your earnings, or where you invested as compared to your friends or your family members. It's all about how it is and how important it is for you and whatever goals that you actually have. And that's why it's so important to learn the rudiments and the foundations of it, because above and beyond all things, it's a race towards your goals, not a competition against other people as well. So what's very, very important when you start investing is information, knowledge, and data, because a lot of people come in blindly to a certain investment just because a lot of people do it. I want to submit to you, please spend the time to be able to learn. You don't have to be an expert, but at least you need to have a certain level of knowledge and understanding on what it actually is. And a couple of things you need to ask yourself is this: when you put your money into that investment, where does the money go? Why do you need to put in money there? And how will your investment actually earn? How does it replicate? Those are things that you need to know. And if you try to look at the videos that I've created, there's a lot of general characteristics at it. It could be equity, it could be stocks that you have a piece of ownership, or it could be debt. Like when you put your money into the bank, it's actually the bank borrowing your money, or you buy a government bond, it's you actually lending your money also to the government. Same for corporate bonds as well. At least from those perspectives, you know the structure of how the investment is. Or similar to Pag-ibig MP2, you're putting in your money for Pag-ibig MP2, which that money that you have is given out to people who also want to take a loan and who want to buy a house. That's what I'm saying. A fundamental knowledge of what the investment is. Or if you're buying Bitcoin, you have an idea that Bitcoin is not a company, that Bitcoin also, you're not lending your money to Bitcoin, you're just buying an asset in the same way as you're buying gold. So very, very important component is knowledge. Never ever invest if you do not know anything about it. Never invest if you have not studied it. That's the best way to lose money if you have not studied it as well. Number 2, I think, is this: you have to realize that when you start investing, there's a level of risk attached to it. And I know there are investments that are risk-free, but if you look at it also, even some bonds for some countries, they've defaulted, especially if the country is not really a very, very good country, or it doesn't really have a good history in repaying its debts, or if they've defaulted also at certain times before. But of course, generally speaking, a lot of these sovereign bonds are generally risk-free, especially if you're going to the United States, especially if you're investing in a first world country or a developed market. These bonds are generally risk-free. But what I'm saying is this: don't ever think that when you go into an investment, it's all gains. Don't ever think that when people come to you or when you hear something that it's all upside and there's no downside. Then that's where it gets fishy. That's where it gets wrong also. That's why, even me, I've said this in a lot of videos, that every time I get into an investment, every time I look into something, I don't look at the upside first. I don't look at the potential to earn first. I look at the downside first. I look at the risk first, because every time I figure out my downside, every time I figure out the risks that are attached to it, everything else that's extra will be my upside. And I hope that's what you get also. You need to realize what are the risks when you invest into something. That is there a potential that you could lose everything? What's the potential for a decline for that particular investment? Very, very important to know what will be the downside, what will be the risk, and what will be your exposure, because that will also help you also to realize how you could diversify your investments. That will also help you realize also that if you're young, maybe you can take a bit more risk, or if you're older also, maybe the risk that you can take should be a bit lesser, because you're getting older already, and the ability for you to be able to recoup that won't be as much anymore. So you have to look at it from that perspective as well, that there are certain things, there are certain conditions that risks is very, very important. So It's not just that you need to know a lot about it or you need to have information about it, but you need to realize the risks that you're getting into, because it's easy to get blinded. It's easy to get excited when all you see is the gain. It's easy to get excited when all you see is the opportunity. Please remember this. Knowing what the risk is, that's where the opportunity lies. Knowing where the risk is, but you still go through with it because you've calculated the risk also and you've managed it. That's where earnings will be as well. So knowledge is important. Number two, knowing the risks that are there in the investments that you take is something that's very, very important and it's very, very essential. Number three also is this. A lot of people, when they get excited about something, they jump in. It's also very, very important to know how to allocate. That as you allocate also based on the risks that you're willing to take and the knowledge that you have. Meaning, if you're not too sure yet about it, if you don't have full conviction towards it as well, then maybe you don't have to put in a lot. But it's nice also to start with a very, very small amount because it gets you skin in the game. And if you followed my videos for quite some time, I've been saying this over and over that if there's no skin in the game, there's no game at all. So very important to put a bit so that it allows you to be able to allocate well. Which brings me also to the next logical thing, that execution is everything. No matter how much you plan, no matter how much you do risk management, no matter how much you try to spend a lot of time to be able to learn more about it, but if you do nothing about it, then it's not really gonna help you. No one ever got rich because they overanalyzed. No one ever got rich because they did so much risk management, because the money still is in the execution. So study, get as much information as possible, do risk management, allocate, but above and beyond that, you execute. And similar to what I said about allocation, the more experience you get and the more conviction you get, the more you can increase into that allocation that you want to add into it. Which brings me to my last point. It's actually two: conviction and experience, which goes hand in hand. The more execution you have, the more experience you will actually get. And the more experience you actually get, the easier it will be for you. It's just like maybe driving a car. First time, you could read manuals on how you could drive a car, but unless you execute, unless you actually try it, you won't be good at driving a car. First time you drove a car, for people watching this, comment below if this ever happened to you. The first time you started driving, you know the feeling that it's not something that's very, very good and easy to do. However, the more you started to do it, the more you realize that, hey, I think this is something that I could do. And it's just repetition. The more you execute about it, the more you execute on it, the more experience you actually have, the easier it actually gets. So experience, but as you execute and as you have experience, what that actually gives you is conviction. And as you have more conviction, because you've done it over and over and over, that will allow you to do things that majority of the people are not actually doing, or that will allow you to do things that a lot of people are scared to do. In the same way, even for a lot of people who comment below if this happened to you, you were skeptical about Bitcoin, you were scared about Bitcoin, you didn't know what it actually was, but when you studied about it, when you did risk management, and then when you allocated a small amount of money for it, and then you executed on it, the more you did it, the more you realize that, hey, I think this is something that fits me. I think this is something that I understand. Conviction is very, very important because a lot of people have lost money also, or have sold their investments prematurely, or have panicked and sold at a loss also, or when the time is right to be able to buy because it's so cheap already, because there wasn't any conviction in it, they weren't able to invest. So I think those are things that are very, very essential. Please do remember that even if I'm saying this also right now, this doesn't happen overnight. Learning is a continuous journey. It's a process. Risk management is something that you tweak over and over, depending on how old you are also, or depending on the series of executions that you've actually done also for a certain investment. Then execution, which is everything. Don't overplan it. Execute it the way you can. Then experience. Experience is the best teacher. You can read as much as you can, but experience will teach you more than what you've ever read or whatever seminars that you have. And lastly, conviction. I know I said 3 things, but I ended up with 5 because I think there's just so much to share. There's so much to be able to impart to all of you. And I hope that that was something that was beneficial and insightful to all of you as well. So if you guys learned a lot from this, comment below. I'm learning. If you guys have any questions, put them down below as well, and try my best to give you as much videos as possible to help you reach your goals of financial freedom. So that's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.